In today's video, we're going to look at one of the trade setups that we did in the breakout room today, and it was in Target. So I did find a setup, but I do want to share that it's not the highest probability setup. We do have price above the 200 simple, but you also have it below the 50 simple, and the 5 and 13 are in a sell mode. So is it still a good trade? It's not the highest probability trade, but it is a relatively low risk setup. Okay, so this is what I'm looking at. We had some symmetry projections of prior declines. We have the 618 retracement of the prior swing. We have an extension, a 618 extension of this prior low to high, and that gives us actually there's a larger zone anywhere between 68.76 to 69.79 as far as possible support. Now we're holding the support. That's the setup. Now you have to look for a trigger that tells you that it's worth placing a bet. And the trigger, we did see the aggressive swing trade trigger on a 15-minute chart, which means it basically had the moving average crossover to the upside. And we also had a pattern shift because we took out a prior swing high. And if you do elect to use the more aggressive trigger, just know that it is going to get stopped out more often than the 30-minute trigger. Okay, but you know, if you are aggressive, then you can use it. Bottom line, if you took a trade when it did trigger an entry, your initial stop should be placed, I would say, below this prior swing low. Okay, I mean that I think is the best way, rather than to risk all the way underneath the low end of the cluster. It's not like you can't go back in if we test the lower decision, but again, that's up to you and the way you want to look at it. But bottom line, even though it doesn't have everything on the right side as far as the moving averages and all that good stuff, the risk is pretty clearly defined. If you get in when it first triggers and you just have the stop underneath that low, but the potential reward is to the 74 and 75 handles, and then from this larger swing up towards the 81 area, then maybe it is worth looking at, even though it's not the most ideal setup. But I'll have to tell you one thing. In this market, the ideal setups have been definitely harder to come by. I mean, you'd see something like FSLR, for example. This one, you do have all the moving averages on the right side. You're above the 200, you're above the 50, and the 5 and 13 are in a buy mode, and you're having a symmetrical pullback. So this actually would be a better trade than the target trade, but again, that doesn't mean that target won't work. So those are some parameters for you to play with, and also a couple of things to think about.